Hey traders, what happened Friday here? This is my weekend video. So I'm not really a big crypto person, but we have to be very mindful of what happened Friday. There is a belief, uh, uh, the CME was mentioning that uh, a big fund blew up and forced liquidation Friday on Bitcoin. And basically, what we have done, you can see my wedging pattern here on Bitcoin. I got my anchored VWAPs on here. So I anchored the VWAP off this high and anchored the VWAP off this low, and both of them came right into an apex. I love that setup. Whenever you have it right at a range low or range high, you know there's about to be a big move. It could have very easily broken down, but I'm just saying we were set for a big move, and but we came in Friday, and that's what they did. They just rocket shipped us up. And even pre-market Friday, things were looking fairly decent for Bitcoin, uh, right at the buy zone. That we get a continuation. Look how we went from one side of our wedging formation all the way to the top at the other side of the wedge, suggesting that we will be breaking out Bitcoin to the upside next week. So be very mindful of that. Now, with that being said, one second here. Okay, guys, with that being said, this is a breakdown of the Russell 2000 financials. We knew financials were top news Friday, and we were seeing very easily record earnings for JP Morgan, really good results out of Wells Fargo as well. They were gapping up Friday morning. Financials are a major section of the Russell 2000. So I was automatically, immediately looking to the call side on the Russell early on Friday morning. Actually, I actually put a fairly large trade, the opening second of the market at market order on IWM calls, um, right as the market opened, and boy, they never even looked back from the moment I got in those, and it was just awesome. I did get out too early on the first time. I had a trailing stop. It came down just enough to take me out, but I got in two more times, and I had a fairly good day. Not nearly as good a day as I should have. Uh, I got in at 74 cents a contract. I think they ended up like 440 a contract by the end of the day or something like that on the options. So they really had a very good day on those options on IWM calls Friday. I think I was one strike out of the money too. But with that being said, I bring this chart up is because the biggest single holding in the Russell 2000 is MSTR. Okay, this is MicroStrategist. So basically, routinely you will see uh, new leadership or new market cap sizes in some of your major industries. You have to be apprised of what's going on. And I was actually shocked about this. I did not realize MicroStrategists had become such a major holding in the Russell. So basically, I wasn't really watching this that close. I was really focused on the financials myself. But look what happened to MSTR Friday. I mean, it was just something. My chart. And as you can see, we were up 16% on MSTR with what was going on with the Bitcoin because MSTR has a major weighting towards Bitcoin itself, that specific crypto. And we had almost 11,000 contracts coming in Friday for monthly expiration. That's next Friday's expiration. We blew right through that. I mean, we are in a massive potential positive gamma situation. This was one of the biggest open interest call walls going into OPEX, and wouldn't you know it, we just blew right through it. And so this is really can feed into itself. I don't know what's going to happen Monday. Maybe they're done. Uh, if you go down here on the breakdown here real quick, this is our monthly expiration this week. And it's best to go out all strikes whenever you're trying to analyze something like this. And we'll just go down here, get this about halfway here. And as you can see real quick here, so we have a big strike at 200 on the put side, but we don't have that 10,000 anymore open interest. You see that? So they just completely blew up. MicroStrategist, what price point was that? 200, the 200 price point. So be very mindful of that. So 200, like I said, there it is, 10,000. So we have 10,000 open interest on that. So, and then we went above 210, we have another 16,000 right there. We're in a massive, so you know these guys are really, anybody who went long MicroStrategy really is getting paid good, and the option writers are getting just annihilated. But as this was going up, they were feeling comfortable at the 210 area as a big strike. Now, if we get through that, we're actually looking at 225 is the biggest one right now. So this is our main uh, call wall now, the 225 for this week. So for the next 5 days, we're potentially seeing 225 as uh, our next major strike. And in the grand scheme of things, give me a second here, I'll get my calculator out. So if you're doing the math, guys, you're looking at a 5 to 6% move higher this week, potentially here for MicroStrategy, 5-6%. What I generally do then next is put ATR on my charts. So my main takeaway here, guys, for the daily ATR, we're looking at almost $13. Okay, we closed at 212. That puts us at 225. So we can potentially, just based on ATR, average true range, we got 5 days trading weeks. One day will get us into the call wall, potentially. So I have to sit there and think we're going to 225 this week along the market's hold up. So be very mindful of that. This is not a beast to be shorting, in my opinion. I think it's a very high odds scenario here. Now, if you do put 1 second here, in my final analysis on MicroStrategy, our call wall now is at 225, right? Well, we have an expected move all the way to 234. So that's plenty of possibility here. And if you even zoom in here, guys, because you know they really jacked up the implied volatilities going into this week. And if you just put your Fibonacci's from the close to our expected move for the week, you know, basically the 61.8. You know, so basically, if you just do half the expected move for the week, basically, you know, we're going to be right into the call wall. So there's plenty of analysis I'm giving you here there suggesting MicroStrategy is probably going right into the 225 call wall. So I would not be looking to short that. Okay. So guys, I didn't update my put and call walls. This is from Friday. So I just want to give you an idea here. So we close above the 220, massive call wall for IWM. Okay. And the important thing here is that because we closed above that, the 220 now becomes new support. So now we would expect 220 to be defended going throughout the course of the week. So to the downside, anytime closer to 220, you want to be uh, uh, looking to uh, go long. The closer to 220 we would get this week as new support for a stair step higher. And remember, MicroStrategy is a major contributor to this, and we do have more banks coming out next week. So the combination of two, you know, I just want to be buying the dips on the Russell going into next week. So basically, what we have done now, if you guys realize, since OPEX, IWM has been in a corrective phase. Okay, and what did we do? So we went back to the anchored VWAP from OPEX where we had the rate cut. So we have come right back into the critical bull bear cross from the moment the Fed did the rate cut. So basically, in my opinion, anything above the close or the high from Friday you should be buying because you're actually turning bullish on inventory versus OPEX, in my opinion. So be very mindful of that. And the 2 weeks ago, our anchored VWAP started at 223.05. So I would be looking for a fairly fast move up to the 223.05 to backtest that from last week. So 2 weeks ago. 2 weeks ago. So that would be our next main test is 223.05 here on the Russell. So this is the sector that I am technically more bullish about than anything. We're coming off of This right here represents an anchored VWAP support buy area, which held, okay, and we rocketed through it, okay, blew right through the resistance. So, this really looks bullish to me going into OPEX this week. So, uh, anything can happen. They can roll all over, but based on the flow that I'm seeing in the markets, there is a bunch of call activity for this month's OPEX. So be very mindful in your trading this week. One final note here. I told you 220 is a new support. And if you go to the trade grid, look at the open interest now. This was not that way Friday. Coming into Friday, now that has become a massive put wall. So when I update my charts here in a few hours, I'm switching it from a call wall to a put wall. 62,000 contracts are sitting here defending 220. Just like I just said, I knew that without even looking at the open interest. And now I come over here and look at open interest and just validated everything I just told you. Okay. Now, that being said, now if you come down here, so we have 68,000, 68,000. So 225. So 225 now is our new call wall here on the Russell going into this week. And so be very mindful of that, 225. And I told you 223 is probably our next, probably Monday, probably our next target Monday. 223. You see that is not a major spot in the storm. So that suggests to me this area here is probably not the big deal. So we have a massive call wall right up here at the 225, suggesting to me that very high odds at some point in time this week that we're probably going to be testing the 225 here on the Russell. So let's just be very mindful of that in your trading. Okay. And I do want to point out the big call wall. Our expected move puts us all the way up to 226.52. So that's another one. We're going into the call wall, and we're not pushing the edge of the envelope to get into that call wall. We've got plenty of room to go past it and still not be outside the expected move. Okay, you notice how semis they were up Friday, but they weren't really going nuts. Well, we had a major open interest call wall here, 4,700 contracts sitting right here at the 255. That's really what held down the semis Friday. We had so much open OI, and the rotation was really over in the financials, over in. So there was just not enough money in the markets to be, they saw this massive call wall that they were battling in the semis. The semis had already been good for the week, so they gave that timeout on the semis, and they rotated the money into other areas that, that were, better opportunities to go to the upside. So that's all I'm seeing here in the semis. Semis look like, constructive, but we have seen, look at how these expected moves all line up right here at this price point. So, we do have a lot of resistance to get through. I mean, I don't think you really clear 258.65. You have to really start clearing that to, actually start really getting bullish here on the semis. So we're into a lot of resistance here. Now, if you go over to the trade grid real quick here on the semis, and I'm sticking with the stuff that's really driving the market's price action here. So basically, we do have a major. You notice how, we crossed over the 255. Was it 255? Let me look at the chart real quick. Yeah, 255. We had a major call wall, and here's what I want to point out here: the open interest. See how open interest is so small at the 255 on the put side? So they weren't coming in here buying insurance at the 255 to build new support. That suggests to me that they're not wanting to support semis at this price point. So it's giving me a red flag going into the first week that they may want to back and fill this early on this week. So be very mindful what I'm seeing here. potentially seeing here. Yeah, this is Sunday, so these open interest and stuff should have already updated. I could be wrong. Sometimes Thinkorswim does not update that stuff until late Sunday evening. Uh, but let's just keep this on mind. Remember, we do have a holiday Friday or Monday. There's a holiday Monday. That could be the data which you would typically get updated today might be delayed till Monday on these open interest and everything because of the holiday. So Schwab's taken over some of the stuff you can't count on the data, weekend data being all timely like you're used to. It used to be like a wrist watch. You knew exactly when data was being, like open interest stuff like that. You knew when it was going to be updated. But since the Schwab takeover, Thinkorswim or TD Ameritrade, you know, it's a wild, wild west whether this information's getting updated the way it's supposed to be. I did in Monday morning or Friday morning's video mention I was looking at Tesla. I saw the opening pre-market print. We had blown through support. This area right here was green. I had this green. This should have been support. Friday morning, we blew right through it. The problem is when you blow through a critical support, sometimes they immediately come in, buy it up, and they save the support. Other times, that's just they just blown it up and they never look back. Okay, and I had mentioned that in the video Friday. And what they did, they never looked back. So this is a broken chart, bearish chart. I told everybody Friday morning, I said I'd only be looking to the short side on Tesla. It has broken pattern. And, that would have been a good payday if anybody had taken it out of the gate short Tesla. It came right down to the September support and it was defended. So I used the anchor VWAP from September 1st, okay? And, it came right down to that anchored VWAP from September 1st. It held that level. I love anchor VWAPs as a very critical tool, and they held support right where they had to. Okay, so doesn't mean, so as long as they hold Friday's lows, it's by, you could potentially buy the dip. But in my opinion, this is a broken chart until proven otherwise. So be very mindful of that. If you go over into the option market now, give me 1 second here. This is going to be the last one I do, guys. It's getting a little bit long here. So we have major open interest now at the 200 strike. Major. And also major open interest at the 210 strike. Okay, on the bearish side, because it's a bearish pattern potentially here. And then on the open interest here, you really got to go, you really got to go all the way to 250 now. You got almost 40,000 contracts at 250. I mean, that's a long ways away here. 250 for the bullish side, at the call wall on Tesla. That highly doubtful that we even try to attempt to go after. The news is already out. I think the odds are more likely that we're going to be going towards 200 versus that. So, but we did hold support. So, like I said, 200 puts us down here. That actually puts you outside the expected moves. So that doesn't really line up right either. So yeah. So really not a good pattern right here, right now for either direction, in my opinion. So just be mindful of that. The wake-off method suggests this is where you would, on the daily time frame, where you would be looking to buy the dip, from the walk-off method. But in my opinion, if I'm trying to trade a trend, I want to save the anchored VWAP support and resistance areas. And when you lose that, then I really don't want to mess with it. And this, in my opinion, is a blown up pattern. So I really don't even want to look to the upside on Tesla. I want to be selling pops, in my opinion. Okay, and then one final thing real quick here. We did have a 575 monthly OPEX call wall. So coming into this coming Friday, we had a 575 call wall that we are currently trading above. Okay, so be very mindful of that. We may have actually come into a uh, resistance point here in SPY. So let's be very mindful that we potentially might have done that. If you go over uh, to your trade grid on SPY, I'm not going to go through cues. I'm just going to leave it at this and go down here. So I do want to point out here, we don't have a major put wall. The major put wall is over here. So it's another thing on SPY. If it's going to be really strongly supported, don't you think there'd be a major put wall really close to where we're currently trading at? That's always a red flag for me. I want that put wall really close, which we don't currently have. Okay, but we do have a call wall right above us at the 580. Okay, so we have one at 580, and then the big one's way down here at 585. Okay, so if I was being really, bullish, seeing that call wall, which IWM is actually showing me potentially a really bullish sign. Okay, now also remember, like I said, the bond markets or the bond markets and the option markets are not going to settle Monday because CBOE will be closed in Chicago. So just remember on this open interest, this data with the CME group being closed, it may be flawed, might be not accurate. So ideally, what I do when I'm going into 3-day weekend, the best thing you can do first thing Friday morning, screenshot your trade grid. See where the open interests are. That's one way to do it. Another thing, you have go under the analyze. Okay, think back. So today that'll take us back to the 12th on SPY. Okay, and let me pull this down here. If I can get this to pull down. There. Sometimes it's a pain. There it is. Okay. If we go out on the monthlies, so what? Let me look at the calendar real quick. Calendar. 1 second here. So we're coming into this week, 13th, so 18th, that'd be Friday. Okay, go back to trade. Oh, no, go back to analyze, think back, 18th, right there. I have to zoom down a little bit here. There it is right there. I always have trouble closing this thing out. I don't know why. There it is. Okay. Okay. Now, if I go down here, I'll just put 14. There you go. So like I said, the 585, we've got this. Basically what I want to do is compare. If I look back to Friday, I want this thing to be showing up different than what I'm seeing in the trade thing. So the numbers that I'm seeing here in the open interest, I want these to be, if it's reading from Friday, I want these numbers to be different than what I'm currently seeing in the this trade here. Okay, so that tells me these open interests have been updated from the CME group. What are we seeing right now? If you go over to the analyze again, we are seeing the exact same numbers. So this tells me right here, right now, we are taking the data from Friday morning as the open interest. So this analysis I'm giving you is kind of outdated, and it's been screwed up largely because of the holiday that's hitting tomorrow. So just be very mindful of that because a lot of traders miss that when they're trying to establish their call walls, put walls, and all that stuff. And this is really important to me, knowing the open interest to establish where price should be headed in relation to that. So that suggests to me some of these brokers, if they don't update this tomorrow, which that's a routine problem if this is not accurately updated, a lot of traders are going to be sitting on their hands tomorrow because they don't have accurate information to set up their risk tolerances against. Okay. So thanks a lot. Please, if you guys do see any type of actual updated uh, uh, open interest on the trade grids, if you guys want to post them down below for some of the main things like SPY, Qs, IWM, some of these main tickers. If you want to put them down in the comments area, I really appreciate it. It'd help everybody out who's watching my video. Appreciate it. If you get accurate information. Well, right now, obviously, Thinkorswim's not giving us the accurate information. Typically, this time of the day, on Sunday, it's already been updated. So that just tells you that the holidays do mess things up. Oh, be sure and like my video if you get a chance on Twitter or X, and if you can retweet me, I really appreciate it. Like, get a lot more viewers on this. Appreciate it. Thanks.